Hey folks, welcome to this video where we will be showcasing our Abby's Attic strategy. This is a strategy that incorporates elements within the concept of bond laddering. We mentioned it before during one of our Ben's Bits videos where we introduced the idea and then had a deluge of people asking for more details on how we utilize it, how we implement it within our ecosystem here. So because of your interest and your requests, we're going to be making a video illustrating our approach when it comes to investing. Before we go too far, I'm sure most of you will be familiar with aspects of this strategy. So just keep in mind, this is one of the many methods that we employ when investing. But just to recap quickly, the idea of bond laddering is more synonymous with the stock market and comes from staggering investments, typically bonds, hence the name bond laddering. But staggering investments with different maturity dates and then reallocating the returns into another bond at a higher yield with a maturity date in the distant future. This process continues indefinitely until the returns are withdrawn and reallocated or distributed elsewhere. The driving principle behind this technique is to allow a wider margin of error when mistiming the market and redeploying capital at a higher rate of return upon maturity. So you're using bonds to climb a ladder at a higher rate, and it's a good long-term strategy, but it does take a lot of time. Time in the sense of waiting for the investment to come to fruition, which can be years downfield. The way we implement this strategy that we affectionately call Abby's Attic, because we use this principle mainly for building retirement or preparing for a future event. Again, such as retirement, college, daughters' weddings, legacy wealth for children, things like that. Now, we use this concept because of the added benefit of not having to lose so much capital every month, which allows for an exponential return. And basically, we bounce back and forth between the options market and notes. And before we go any further, we're not going to be discussing the tax ramifications because that rabbit hole just has too many factors to include. And I do suggest running a few of these for yourselves to see what your particular situation would consist of, and then run that by your accountant or your tax preparer. I will say my father had a saying growing up that is very accurate. Not everyone graduates top of their class. I've had many a discussion with people in that sector. So find yourself a great agent that knows what they're talking about and knows the industries before they cost you a lot of revenue. That said, moving forward, let's give you a very simplified example for contextual purposes. And again, it's just an example. But say we have $10,000 to start with, and we put that into stock options, and it doubles that year because the market was very active. So we end up with $20,000, giving us $10,000 in gross profit. Now, we put that $10,000 of our capital stack back to work in the stock options, while at the same time we hedge against any fluctuations in the market by acquiring a $10,000 note that produces an annual yield of, say, 7%. And they range, but let's just say 7%. And the genius of this concept is that over a decade, that $10,000 would produce $100,000, producing a 7% yield, backed by real estate, giving you true passive monthly payments with very little loss when compared to rentals or any other real estate investing vehicles where you'd lose half the expenses alone. What would your portfolio look like if you didn't have it to recoup half of your expenses every month. The world isn't flat, but there still are a few of you out there who are still investing in the dark ages. Don't be one of them. If you have a little bit of time on the clock and your goal is to retire earlier than you'd like, or you have to pay for college or weddings to plan on, maybe you want to be philanthropic, or you have your favorite charities you'd want to assist with, or perhaps you just want to leave a very nice legacy of wealth to your descendants. This may be a strategy you may want to consider because it's been very lucrative for clients who've utilized this method. And this is similar to another approach we have called Sparrow's Boot, and we'll most likely be making a video on that as well at some other point in time. So be on the lookout for that. As always, thank you for watching, and we'll see you next time.